Hello and welcome to Legal Wrangle on Indirect Tax. In this episode, we bring you 5 cases relating to enhancement of value, service tax and the oft-recurring issue of unjust enrichment for grant of refunds. Let's move on to our first case of Omex International, a proprietary firm. The question involved in this case was the valuation of obsolete models of used capital goods imported into India. How relevant is our national import database for this purpose? Let's go to Maneet for the details.
The assessee had imported 105 obsolete models of used photocopier machines of different brands. As current prices of these obsolete models were unavailable, the assessee had declared the supplier's value along with the chartered engineer certificate. The department rejected the value and held that as per the National Import Database, the value of goods was higher, which was thus enhanced to twice the declared value. Also, as the assessee did not have an import license, the commissioner ordered confiscation of the photocopiers, a redemption fine and penalty under the Customs Act. In the CStat, the members disagreed.
Following this difference of opinion, the case was transferred to the third member of the CStat for a majority decision. The third member upheld the value as declared by the assessee.
CStat held in a majority decision NIDB data not relevant as no two consignments of second-hand obsolete goods will be comparable. Value of imported goods shall be the transaction value of such goods under Section 14 of Customs Act.
The courts have held in a series of judgments that the quantum of redemption fine must be sufficiently high to mop up the entire profit margin because nobody can be allowed to profit from import in contravention of the exempt policy. Our next case involves service tax on a Reliance Group company. The assessee Reliance Infratel is a subsidiary of Reliance Communication and provides infrastructural support services to its holding company. The question was whether the payment received by the assessee from its holding company was an advance towards taxable services rendered or a loan by way of intercorporate deposits. Let's go to Maneet.
Reliance Communication, the assessee's parent company, had incurred hefty expenditure in setting up the business of the assessee and extended various loans and advances too. The assessee provided business support services to Reliance Communication for which it had raised invoices and had paid its service tax liability thereon. The assessee stated that these amounts received from its holding company towards services rendered were used to repay during the same financial year the entire interest-free loan received. The revenue rejected the assessee's statement and concluded that the payment received from Reliance Communication was actually advances for services rendered, and these taxable services were being set off against the financial support given to the assessee at the time of setup. Therefore, the assessee had not received any consideration for the service rendered and failed to discharge its service tax liability. Revenue thus raised a demand.
The CStat allowed the assessee's appeal, holding that only payment made towards services provided can be brought under the ambit of consideration received and not any other amount.
Payment shown as loan and not consideration for service rendered in audited accounts of assessee and RCOM. Assessee's repayment of loan reflected in account books. Invoices do not reflect any adjustment of amounts. Entire payment made to assessee by RCOM does not qualify as advance towards services to be rendered by the assessee.
Our next case relates to the principle of unjust enrichment for grant of refunds, an oft-repeated issue. The assessee is Ispat Industries, a bulk importer of iron ore and other raw materials. The question before the CStat was whether the assessee claiming the refund had discharged the onus of proving that the duty incidence had not been passed on to any other entity. Maneet has the details of the case.
Often when the assessee imported iron ore, the mother vessel carrying the cargo was unable to reach the jetty and had to discharge the cargo to a daughter vessel which brought it in. This cost of transportation by the daughter vessel was included in the assessable value of the goods for the purpose of calculating the custom duty. Pending appeals, the assessee was compelled to pay duty on barge charges, which was paid under protest. Eventually, in September 2006, the Supreme Court held that the barge charges were not includable in the assessable value of imported goods. The Apex Court also directed Revenue to refund to the assessee any amount collected as duty on barge charges with statutory interest payable from the date of payment to the date of refund. The assessee filed its claim for refund of customs duty paid, but Revenue raised the issue of unjust enrichment. In response to Revenue's raising the issue of unjust enrichment, the assessee stated that these provisions were not applicable for the period prior to July 2006. The assessee submitted a chartered accountant's certificate that the duty paid by the assessee was not included in the cost of production.
The assessee appealed before the CSTAT. Due to a difference in views expressed by the member judicial and member technical, the matter was referred to a third member for a majority decision.
Imported goods captively consumed by the assessee in manufacturing. Principle of unjust enrichment applies to captive consumption. Assessee records do not reflect duty paid on the raw materials as amount receivable from the department. Inference of cost accountant not sufficient to be reasonable rebuttal of statutory presumption of passing on the duty incidence. Assessee not eligible for duty refund.
Perhaps this is not the last that we shall hear of this case. After all, the refund involved is more than ₹6 crore. Our next case relates to service tax. In this case, the assessee is Coca Cola India, a wholly owned subsidiary of the Coca Cola Company USA and in the business of beverages. In this unusual case, service tax liability was arbitrarily imposed by the department in such a non-speaking and cavalier manner that CSTAT imposed costs on revenue. This was unusual. Manith has the details of the case.
The assessee had incurred expenditure in foreign currency on account of foreign trips made by its employees for business purpose, which were reimbursed to them, as well as advertising and marketing expenses. The assessee had made payments to various advertising agencies abroad and paid the service tax under the reverse charge mechanism along with the interest. No service tax was paid on such payments prior to 2005 and 6 as the reverse charge mechanism came into the effect from April 2006. Under the reverse charge mechanism, the assessee was liable to pay service tax on foreign currency payments made to a foreign service provider for rendering services. Under marketing support expenses, the assessee had reimbursed a part of the marketing expenses incurred by its bottlers. The assessee had also incurred expenses on lease of various warehouses premises taken under operating lease agreements, as well as expenditure on lease of vehicles. No service tax was paid on these transactions as the assessee was a service recipient and not a service provider. The adjudicating authority, however, levied service tax and also directed the assessee to register itself under the Renting of Immovable Property Act and Supply of Tangible Goods for use in India. Service tax demands were confirmed against the assessee along with the penalty and interest.
The CSTAT, shocked by the sheer arbitrariness of the order by the adjudicating authority, liberally extracted and verbatim quoted paragraphs after paragraphs from the adjudication order, calling it a careless order passed without application of mind. The CSTAT imposed costs on the revenue.
For travelling expenses, the reimbursements are not liable to service tax as these are not related to any taxable service. Advertising expenses, CSTAT held that revenue has not established that any more service tax is leviable. For lease of property and vehicle, assessee is service recipient and not the provider. Cost of ₹25,000 to be deposited by the CST Delhi into the PM Relief Fund.
The tribunal held that the adjudicating authority had been highly and conspicuously non-speaking, non-reasoned, arbitrary and cavalier while passing the order. Even calling his findings an analysis was an embarrassment to that word itself. Such orders adversely impinge the public's trust in public authorities, and hence such irresponsible conduct from a public authority deserve to be put to cost, quipped the CSTAT. Phew! After such an acerbic order, let's move on to the last case of this episode of Legal Wrangle, which relates to service tax on interest. The assessee is a bank also providing hypothecation and leasing services. The question in this case is whether interest on hypothecation loans received by a bank is liable to service tax. Manit will bring us the facts.
The assessee bank had received interest on hypothecation loans. The adjudicating authority held that the bank had rendered services in the nature of hire purchase, and therefore the interest received is to be treated as finance charges received from lease or hire purchase and not on loan. Thus, the interest received by bank constituted the gross value of taxable services provided and was liable to service tax.
The CSTAT held in favor of the assessee, holding that interest is the consideration for the liquidity foregone by the bank by lending the funds. It is not a service and therefore not taxable.
Interest is consideration for liquidity foregone by bank due to lending the funds. Interest on hypothecation loans not being consideration for service is not taxable.
Well, this brings us to the end of this episode of Legal Wrangle on indirect taxes. You may write to us your comments, criticism and counsel at editor@tioltube.com. Please do subscribe to the TIOL Tube channel on YouTube. It's free and will keep you updated on new posts. Keep calm, pay your taxes and have a good day.